Is it the right time to sell your investment property? In today's episode, I'm going to uncover the things you need to consider. I'm going to talk about the broader landscape, what's going on in the world of property. I'm going to talk about some of those personal things you need to really think through to make sure that this is the right decision for you. And number three, I'm going to give you a big warning. And I'm going to tell you at the end, stick around because I don't want you getting led astray. And if you are a real estate agent, you might want to tune out for the end. But let's dive into it and get started. In case you don't know me already, my name is Steve Williams. I'm the founder of W Property Advisory, and we talk all things rent vesting, property, and getting ahead. And remember to subscribe to the channel. I'd love to have you stick around for future episodes. So let's dive right in and talk about, is now the right time to sell your investment property? Let's firstly understand about what's your long-term goals. If you're looking to sell the property to maybe move the money into another investment, that's a different story than if you're just looking to sell and cash out right now. But I think you need to have a think about what is your long-term objective and what goal are you trying to achieve? Because that's also going to help you decide whether this is the right decision for you. But let's take a look at what's going on in the landscape of Australian property right now. There's some factors going on. We've got high population growth. We've got interest rates coming down. We've got very low supply. And to me, that spells that house prices in most locations are going to come across. And if we look at the most recent data, all of the capital cities are actually recording growth right now at all different levels, but they're actually all growing right now, which doesn't always happen. So let's take a look at some of those factors I talked about. You might be seeing headlines in the news. I want to share this one with you. This is from ABC, and this is pointing towards property prices tipped to hit record highs in 2025, 2026. And this is going to bring pain for buyers and also a boom for sellers. So if we look at what this is saying, it's saying that all of our capital cities, based on data and forecasts from Domain, are looking like it's going to grow anywhere from 4 to 7%. Now, when I see these forecasts, often they're understated. And this is talking about the whole property market. And we're talking about like the high end and the low end. But if we consider that a lot of growth occurs at the lower end because it's more affordable and there's a lot more transactions occurring compared to the high end. So while this is a guide, generally you might find that this might be understated a little bit. But overall, it's saying that all of our major capital cities are predicted to grow. Currently, all of our capital cities are at record high prices, except for Canberra, which is 7% below the 2022 peak. This is an article pointing to more interest rate cuts are likely. How do they actually know this? Well, there's actually some measures that they've got which can actually point to what the market is predicting with interest rate cuts. And at the moment, most of the big banks are predicting interest rate cuts into the mix. This is saying that interest rates could come down to around 3.2% by early next year. And wouldn't that be nice if you own property? And that would mean that it's down 1.15% from the peak that we had during the COVID time. What does this actually mean? Well, if you've got a property worth 500,000, each time it drops down by 0.25%, this is a cut of $76. So if we're talking 4 times that, then we're talking over $280 in savings from a $500,000 property per month. And that is a $500,000 property, double that if it's $1 million property. Now, of course, there's lots going on in the world economy. There's lots of talks of fears around what might happen. But generally, if it means the economy is slowing down, it means that the interest rates will come down to stimulate demand. This means that people have, firstly, more money to borrow that they can access, and also means that cash is cheaper. So it means people put money into property. The other thing as well is if the stock market does slow down or has a downturn, some people, need to keep investing for their retirement. So they might start to put their money towards property, which is further going to fuel that demand. Let's take a look at this next chart. Now, this is from the ABS. This talks about population growth. You can see that across Australia, we had a population growth of 484,000 in the year up until 30th of September 2024. And this is a change of 1.8%. So that's a lot of people. And that's primarily driven by overseas migration. We actually had over 600,000 migrants arrive in the last year, which is quite a lot. And of course, we are catching up from the COVID period where there was no people entering the country, but we are seeing that also people are staying for longer, even though, visas are expiring and things, they are staying in the country a little bit longer. So that is, I guess, heightening the demand for housing, both from a buyer's perspective, but also from a rental's perspective as well. But we have seen that population growth has started to slow down a little bit. But you never know, right? The government could change their policies and let more people in. And we have seen from latest data as well that the applications for Australian visas is at a very high level compared to historical numbers. And especially with the world tension going on, down here, we're a long way away from a lot of the chaos, sadly, that's going on in some parts of the world. I now want to share with you this report from the Australian government. This is the State of the Housing Report, and it's got some really interesting stats, which is going to paint like that macro level about what's going on. So firstly, let's take a look at the population growth. I've already talked about it briefly already, but you can see that the natural migration is actually on a decline compared to what we've had historical, but definitely the international migration has really shot up after that COVID period. Of course, we had a few years where we had no one entering the country, but we can see that the number is really quite high. It is coming down, but it's still very high compared to historical numbers from the past 10 years. Now, the government has sort of lowered the numbers a little bit. We have read in the news just this week that we actually have very high numbers of applicants for visas. Of course, you know, there's some stuff going on in the world which isn't great, and Australia is like a nice, safe place that's away from what's going on. So there's a lot of people that are wanting to move here right now. And really, it's up to the government whether they choose to accept those applications or not. So this will determine whether that supply keeps up or whether we have a little bit of a lower requirement for rentals and also flowing on to houses for sale as well. This one is really interesting as well. This is all about supply. As I always talk about, house prices are all a matter of supply and demand. Excess demand, low supply means prices go up. High supply, low demand, prices go down. Essentially, if you look at this here, you can see the average across the country means that, according to this report, 78% of the required housing is going to be completed. And we can see that some states, it's as low as 65% for New South Wales. Victoria is looking pretty healthy, 98% of the housing. Queensland, 79. Western Australia, 81. South Australia 71, Tassie 51, ACT 78, and Northern Territory only 31% of the required housing. So there is going to be a shortfall. In summary, this means that there's not enough supply to keep up with demand. So I've talked about all that top level data, but really that's going to have a top level impact on all of the states. We need to then dive down to the state level, understand what is going on. And I showed you before that most states, they're predicting for the capital cities to grow in value. I feel like that will probably have a flow on effect to some regional cities. Although if you dive down a little bit further, some regional locations like Northern Queensland, they have a very strong run from investors already. So that might start to fall back a little bit. We're now seeing more interest in regional New South Wales, regional Victoria, and some other little pockets that investors are starting to buy into. Darwin's had a huge growth right now, not for every investor, but we are seeing growth occurring and a lot of demand and very low supply going on. And as we saw in the numbers just there, they're only going to reach 31%. Now, I'm not buying there for clients, but I'm just sharing with the data with you so you can make up a decision for yourself. So I've talked about the data. Now let's talk about your personal circumstances of why you're wanting to sell. Now, if you're looking to sell for a lifestyle decision, maybe you're going to take that money and put it into a house. That's a very different scenario than if you're going to take the money out and put it into another investment. So if you are looking to get into another investment, you need to really take into account the selling costs and also the buying costs again. Speak to your accountant about that before you make any decisions. But essentially, of course, you've lost the opportunity cost of the stamp duty. And for an average investment of around 600,000, you're looking anywhere from 22,000 up to 35,000 in stamp duty to buy the house. And then when you're selling, you're going to pay for agency fees if you go through an agent. You're also going to pay tax if you've held the property for over a year. Then it means that you get a 50% discount. So whatever the increase in how much you bought it for and how much you sell it for, and take into account some other costs in there as well. But you're going to pay tax on that gap at a 50% rate. So take that into account, because every time you pay tax, that's taking away the opportunity costs. And sometimes you might be better off holding on to the property, refinancing, taking some equity out and buying another one. So always speak to your accountant about that first. But note that if you're buying another property, you're going to have stamp duty to pay again. And you're also going to have potentially buyer's agent costs. You're going to have all of the transaction costs that take place as well. So if you're buying into another market, always make sure that that market is likely going to perform. Otherwise, you could find yourself going behind. And if we look at those numbers I shared earlier, most capital cities are looking at growth from say 4 to 7%. So it might sort of all even out depending on how long you're planning to hold the property. If you're looking to sell a property and put it into, your new home, or maybe take the money out and have a lavish holiday or whatever it is, just note that at the moment, house prices are growing. So if you sell, you want to get into the market. So you're buying into the same market and you're not going to have that, money out of the market that could potentially lose 4 to 7% if you don't buy straight away. And if you're going to take it out and spend it, just note there might be some opportunity cost there, because it's likely that property prices based on this is going to grow quite strong in the next 1 to 2 years. So yeah, maybe consider your options there. And number 3, I talked about a big warning that I had for people. This is something that really makes me shake my head. It makes me really angry and infuriated. And if you get advice on whether you should sell, I would very much caution speaking to a real estate sales agent. And this is why. I've had 2 people that I've spoken to. One is a client, one is a person who was looking to become a client. They both spoke to their local sales agents who said that it was a good time to sell, but was it really? Well, my client, they purchased in Townsville, and this was years ago, and it was very flat for years, and they were told late last year in 2024 that it was a good time to sell. But little did my clients know that this was about to go through a growth boom, and prices grew by over $150,000. So they've lost all that potential for growth because they took the advice from a sales agent. The next person spoke to me and they said, this was 2 years ago in Perth. They had a property in a suburb called Yangebup, and I knew this place was going to boom. I was buying there for clients. I saw lots of value there. They spoke to the agent, and the sales agent said, now is a really good time to sell your property, go and buy a little apartment, wait for the prices to come down, then take the money and get back into the market at a lower price. Now, I didn't really know them very well, but I said, please do not listen to that advice. I highly recommend hold on to your property, and if you can, take some equity out and do what you want to do with it. If you want to buy another property, great, but please hold on to your property. I'm not in contact with you anymore, but I do hope for their own good that they've held onto that property. So my advice is, if you are deciding to sell, do not ask a real estate agent if it's a good time to sell. Ask them, but take it with a grain of salt, because they have a vested interest in taking your money to sell that property onto another person. So my recommendation, get a different opinion, speak to, a financial advisor who knows property, speak to a buyer's agent who knows property, or a property advisor, and someone who doesn't have a vested interest in what they're saying, because you can be led astray and it can potentially cost you a lot of money. And I don't want that to happen to you. Hopefully this has helped you, have some brain thoughts about whether this is the right time for you to sell your property. Generally, overall, it's probably a good time to hold on to it unless you have to sell, or unless you've got plans to invest further or move into another growth market. Hope this has been valuable. Please subscribe to the channel. Love to see you back again. My name is Steve Williams, and until next time, let's RentVest and get ahead together.
All information contained in this podcast is general in nature and does not consider your individual circumstances. You should consider the appropriateness of this information with regards to your individual objectives, financial situation, and needs, and speak to a professional.